What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today I wanted to talk about and answer the question, is cash truly trash? We're going to get into it, but really quick, just in case you're new, make sure to subscribe for a bunch of videos. Subscribe to my second channel for bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. If you refer one friend, by the end of the month, they're going to give you and the person that you referred each 20 free bonus stocks. And if you refer 10 friends by the end of the month, sorry if you can't really see, they're going to give you either $1,200 or $2,500 worth, it's random, a free Apple stock, which you can keep and hold on to, or you can sell and use the cash to buy something you'd rather have instead. Don't pass up on an opportunity. Webull link in the description. Everything is linked in the description. Okay, so today, I wanted to talk about and answer the question, is cash trash? You hear this all the time. You hear a lot of people talking about this. And guess what? Not only do you hear a lot of people talking about, oh, cash is trash, you hear people on the other side say, no, cash is king. It's still king. It's not what it used to be. It's like the king in the process of a demotion, but hasn't been demoted just yet. It's still king. You hear a lot of this back and forth. Is cash trash? No, it's absolutely not. Now, a lot of the time in my videos, I will share my opinions on certain subjects and subject matters and whatnot, and I'll make it very clear that this is just my opinion. It's not financial advice. Now, this right here, this is not financial advice, but it's also not my opinion either. This right here is a fact. Cash is not currently trash, but it's also not currently king. Cash is neither trash or king at this time. What I believe is king that has to do with cash is cash flow. Cash flow is king. Dollar bills, currency being generated for you in addition to the cash, the currency that you are generating by trading your time for dollars. That active income, you clock in, you work your 8 to 10 to 12 hours or whatever, you clock out. That right there is active income, dollars that you are trading your time for. That's active income. Passive income is cash flow. Cash that continues flowing in, even if it's in small amounts. We all get our start. Your first dollar of passive income comes before your first $10 of passive income, which comes before your first $100 of passive income, which comes before your first $1,000 of passive income, which comes before your $10,000, your first $50,000, your first $100,000 of passive income. Cash flow is king. Now, cash flow can come from a variety of different ways. It can come from royalty income. It can come from interest income. It can come from dividend distribution income. It can be rental income. It could be so many different things. Cash flow is passive income, dollar bills that are being generated passively, whether you are working or not. Dollar bills that are being generated when you're awake and also while you're asleep. Dollar bills that are being generated when you're on the clock and also when you're off the clock. Dollar bills that are being generated 24 hours a day, 7 days a week. That right there, ladies and gentlemen, cash flow. Cash flow is king. Cash on its own is not king, but it's also not trash either. Cash is a very important tool. A very useful tool that really comes in handy, even in today's world. Is it what it used to be? No. But nothing's what it used to be. And in 100 years from now, what we know and love today will eventually no longer be what it used to be. Things change. Doesn't matter, who cares? Move on, get with the times, adjust, and figure out a way to get over hurdles. Cash right now, no, it is not king. but it's not trash. Cash is a tool. Cash could be used as something to propel yourself forward. Cash is what we need to not only keep a roof over our head, food in the fridge, clothes on our back, shoes on our feet, our car on the road. Cash is important for stuff like that, but it's also the way to purchase assets that create more, that grow, appreciate in value, and pay us on paper and just straight to your account. Now, my favorite way of going about doing this is with dividend income. That's my favorite form of passive income. It is hands down the most hands-off way of going about generating passive income. It might be slower than rental income. It might not be as much as other forms, but here's the thing. Hi, how are you? Here's the thing. It's as hands-off as humanly possible. There is absolutely nothing that I have to do, and you can automate it the whole way, the entire way through. From initial deposit to scheduled investments to dividends being reinvested right back in automatically, you let that snowball keep on building, and the snowball will eventually turn into a monster of a snowball, just going and going and going and going. Because guess what? The snowball effect, or the compound effect, gets bigger and badder over time, regardless of what it is that you're doing. It doesn't have to be financial. It could be a fitness goal of yours. It could be so many different things. The compound effect, the snowball effect. Picture an actual snowball rolling down a hill. It starts out small, moving kind of slow, but it picks up more snow, which means it gets bigger. The bigger it gets, the faster it moves. The faster it moves, the faster it collects even more snow. The more snow it's collecting, the bigger it gets. And the bigger it gets, the faster it moves again. And the faster it moves again means the faster it collects even more snow. Now it's even bigger than it was before. And the bigger it is, the faster it moves. And it just goes and 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 goes. That right there, ladies and gentlemen, is the compound effect. That right there, ladies and gentlemen, is the snowball effect. And guess what it starts with? Investing cash. Cash is not trash. Cash is something that can build up a snowball like this that not only builds itself in addition to you continuing to build it and making, regular contributions and whatnot. Not only does it build itself, whether you build it or not, but it appreciates in value and it pays you cash. So you're getting paid in 2 different ways. Technically 3 different ways, because dividend payouts, a lot of the time, grow every year. A lot of rock-solid companies that pay a dividend, look at the dividend aristocrats, the dividend kings of the world. I'm not going to name any because this is not a stock-picking video, but a quick Google search will let you know what a couple hundred of them are, for example. Dividend aristocrats and dividend kings are the ones who give their shareholders a pay raise every single year. Let's just say the dividend yield at the moment of a $100 stock is 1%. So for every $100 you invest, they pay you $1. Now let's just say in 2024, next year rolls around, and they announce that they're giving their shareholders a 5% raise, which means they're not giving you $1 a year. Now they're giving you $1.05 a year. Or it could be a larger amount. And I know a 5 cent tacked on to $1 isn't really going to make that much of a difference. But imagine you didn't just initially invest $100. Maybe you initially invested $1,000. And every month after that, you threw another $100 in. The entire year goes by, and you're looking at $2,200. of your own dollars invested, plus the dividend that they paid you. So technically that would be $2,201. And now you get a 5% raise on top of that while it appreciates in value. Yeah, of course, there are market fluctuations. It goes up and down in the short term, but over the course of 5, 10, 15, 20 years, assuming you pick the right company, or an even smarter idea, you just went with an index fund instead. So it's a whole bunch of companies all in one, and if one doesn't do so well, they just bump it out and replace it with a better one without you having to do anything. Pay raises included, capital appreciation included. So you're getting paid in 3 different ways. Your investment appreciates in value, so it's an on-paper profit. You get the cash flow profit, money that's generated and paid out to you in cash, usually every quarter, every 3 months. They give you a cash payment that you can reinvest back in, or you can just take it out and go to the store with it if you want. And the third is that a lot of these companies will give their shareholders not only the cash flow, but a pay raise of cash flow. A little bit more than last year. That's awesome to me. Now, just a friendly reminder, one of the ways you can get this thing kicked off is by downloading Webull and funding your account. Even tossing $1 in there is all that it takes. You can download Webull, fund your account. They're going to give you up to 12 free fractional shares just for doing so. If you refer 1 friend by the end of the month, they're going to give you and the person that you referred each 20 free bonus stocks. And if you refer 10 friends by the end of the month, they're going to give you either $1,200 or $2,500 of free Apple stock, which you can keep and hold on to, or you can sell and use the cash to buy something you'd rather have instead. Webull link in the description. But that right there is one of many, 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 many ways you can actually get this cash flow started. And maybe you don't want the actual cash flow, but you're interested in the capital appreciation. Then you can invest in companies that don't pay a dividend. There are so many different ways you can go. And it doesn't even have to be the stock market route. It could be real estate, it could be business. I personally like doing it this way because it's a little bit more slow and steady, wins the race. Yeah, it's slower. Yeah, it's maybe not as intense, but it's stable, it's sustainable, it has a 100% recovery rate. We have not only survived every single market crash in history, but we have bounced back and thrived after each and every one. Not only did we simply recover, we've made massive gains post-recovery. Every single time, 100% of the time. And over the course of every single possible 20-year window you look at, no one has lost money if investing in broad market index funds. So if you don't want to invest exclusively in broad market index funds, at the very least consider making it a solid foundation. If you'd rather go the stock picking route and go with individual companies and stocks, which is how I started, and it's not really my main focus anymore. I'm more of an index fund guy now. But consider at the very least making broad market index funds, low cost broad market index funds, the backbone of the stock investment portfolio. That's what I'm working on. That's what I'm doing. Every single day I invest in a very small amount of money in 2 different index funds in my taxable account. Every single week on payday, I contribute enough so that by the time a year goes by, I will have maxed out the Roth IRA. And this is a 40-40-10-10 split between 4 different index funds and obviously a tax-advantaged account. And also every week on payday, 5% of my pre-tax dollars go into a 401k, and it goes into a target date fund. And another portion of my pay goes into an HSA, which is a triple tax advantage health savings account. If you're interested in knowing more about Roth IRAs and 401ks and HSAs, I just posted a couple videos just like a week or two ago. Just go onto my channel and look at those. But you'll notice a pattern here. The HSA, I put the HSA dollars into an index fund of my choice. The 401k dollars go into a target date fund, which is a collection. It's another type of an index fund in a way. My Roth IRA goes into 4 different index funds, and my taxable goes into 2 different index funds. So I'm very, very index fund heavy, and I'm very, very index fund focused, and I like the fact that just by simply touching an index fund, you are automatically diversified. That's what I like about them, and that's what I think is the closest chance we have to a guaranteed shot at success. Because like I said before, over the course of a 20-year window, index funds and investors have not lost money. It has not happened. No one has lost money over the course of a 20-year period in the stock market if investing primarily in broad market index funds. No one has lost money, not one person. People have lost money on individual stocks, sure. Anything can happen with an individual stock. The index funds are made up of a bunch of different individual stocks. Tens of them, hundreds of them, thousands of them, all in one. And if one goes south, it can get bumped out and replaced without you having to do anything. That's why I really like index funds nowadays. But I do have maybe like 10 individual stocks that I've started a position with in the past that I continue to contribute to, or at the very least, continue to reinvest dividends into. But it all started with one thing: a little bit of cash. And on a weekly basis, these portfolios get built up even more. Guess how? With cash. Mostly with pre-taxed cash. So no, cash is not trash. Why on God's green earth would you call cash trash at this time? Absolutely not. Cash is so unbelievably powerful, and the tax-deferred accounts or the tax-advantaged accounts, especially the triple tax-advantaged account, all play a role in building something up for myself that I can use later in life and benefit off of. Not only benefit off of, but benefit off of massively. That's kind of the plan right now. That's what I'm working on right now. And like I said, it wouldn't be possible without cash. So anyway, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. If you guys enjoyed today's video, please hit that like button. Subscribe if you are new. Subscribe to my second channel, which is my backup channel for bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different colors, bunch of different designs, many of which are helping raise funds and awareness for different charity organizations. Link in the description. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. Sugar-free, low-calorie, packed with a whole bunch of vitamins. This is the Miami Nights Pina Colada flavored. Absolutely delicious. It's my favorite one that I've ever tried. Link in the description to get $5 off. And of course, make sure to go, like I said before, go and get your up to 12 free fractional shares. All you have to do is simply download Webull and fund your account. Just download the app and toss $1 in there, or a penny. That's all it takes. And they're going to give you up to 12 free fractional shares just for doing so. If you refer one friend, by the end of the month, they're going to give you and the person that you referred each 20 free bonus stocks. And if you refer 10 friends by the end of the month, they're going to give you either $1,200 or $2,500, it's random, worth of free Apple stock, which you can keep and hold on to, or you can sell and use the cash to buy something you would rather have instead. Webull link in the description. Everything is linked in the description. Let me know in the comments if you believe cash is trash. And if you do believe cash is trash, let me know. Why do you go to work every day to make more of it? Let me know in the comments. Thank you guys so much for watching. See you in the next one. Don't you dare stop smiling. Peace.